and I have known each other for years, and I know you're in insurance, and I know you wear contacts, but I think that's about all I know about you. So why don't you tell me a little bit about yourself, a little bit about your background, how you got into insurance?
Okay, thank you. I'm so glad to be here. I'm glad we could finally do this, and I'm glad that you can meet me on the weekend. It's challenging during the weekdays. So, I'm Colleen. I'm the owner of Secured Insurance Group. I've been in the insurance industry for about 23 years. I got into it because my parents owned an insurance agency. And back in high school, I would go help them answer phones, file, and do stuff like that. When I had my son, I was looking for a job, not a night job, like a 9 to 5 job. So I went in, took the baby, helped them, and I ended up getting my licenses and continuing with it. So that's basically still what I'm doing 23 years later.
So you got 23 years in it, family business. Now, did you guys sold the business and you went out and opened on your own at some point, didn't you? How did that go for you?
Correct. About 5 years ago, they sold the business, my family did, and they sold it to a large, agency that pretty much buys up everything all over. I worked with them for a couple years and I realized that really wasn't for me, working with the big corporation. So I went out on my own. And it's been about 3 years. Next month will be 3 years. So I'm really enjoying, working for myself because I'm doing the same thing. Working hard, but if I'm going to work hard like this, I'd rather just work on my own.
So what's been your biggest challenge and what's been your biggest win since you went out on your own?
Oh, I'd say the biggest challenge is just finding the right people that to partner with, the right people. Because eventually I went out on my own and I partnered with two people that were great guys, but they're not insurance guys. And so I realized a couple months in that it was kind of just not going to work out essentially because they weren't in insurance, they were investors, they wanted money, and I'm trying to say, well, here's how we make money and here's what we do, and I need people in here to make money that want to work with me. I don't mind paying you, but you got to work. So that was a real challenge. I had some legal challenges with my old employer, but we luckily worked that out and it wasn't that big of a deal, thank God. And I've moved on. So the biggest challenge was finding like the right people to partner with me that understand the industry and and especially right now with how challenging it is.
Yeah, yeah, I think that's you and I have been on a panel together. We talk all the time about this, and I write about it a lot. Is just insurance in Florida. It's a whole thing right now. I mean, that's the only way I can put it. It's just a thing. And, what I keep telling people when I talk about it is it's not just Florida. We're just the tip of the spear. It's going to be every state,
Yeah.
especially any state along the coast, any state in the Sun Belt, all the way up California, up Pacific coast.
Yes.
It's going to be bad in Colorado with wildfires and everything else. It's just, everybody thinks, oh, well, Florida's insurance market's crazy. And I go, just wait, it's coming to your state too.
It's
Louisiana, Texas.
everywhere.
Yeah.
And the
Yeah.
rates are, they're high. Like Florida's high in comparison to a lot of other states, but a lot of other states, their rates are rising just the same as ours. They may not be as high because they didn't start as high as ours, were, but it's all relative. They're all going up. It's just a mess, and I don't really know. It's as they call it, a hard market. I guess we were in a soft market for quite a while. So right now it's really challenging. The companies are really rigid. They don't really want to make any bendable rules. All the underwriting is just, top notch. It's out of control, basically.
Do you think if we don't have any more hurricanes that hit Florida this
Mhm.
year, do you think, because we did have one, do you
Right.
think do you think that's going to help?
I think it'll help a little bit on the roof claim side of it. So I think the if we could go a couple years without some, maybe 5 years would be really beneficial, and maybe they could work out the kinks that they have, and we could get some more companies to want to come in here. But I think it's just beyond that. I mean, it was a mess before the hurricanes last year and the hurricanes this year. It kind of got really messy. I want to say when COVID happened, people sitting around, putting in claims, the roofing fiasco and things like that. I think it's going to take a while for them to really get something in place that's going to really stick and really going to be able to be profitable for everybody and affordable for the clients. So hurricanes, yes, if they could stay away, because I know we're almost halfway through October. Yeah, so we have like a month and a half left. I'm really counting it down, because every time I hear the word hurricane, it's like we have major PSTD at my office where you do not want to hear a hurricane, anything else. But, there's still water claims that happens and there's still car accidents and those are the big issues that we have here in our state.
Yeah, we were about to be. It was a tropical storm or hurricane that was moving toward Orlando, I think a month or two ago, and I didn't realize that I had PTSD from it. But the night before it was supposed to come, we'd already agreed we were closing the office for the next day
Yeah,
and to prepare for it. And it ended up being a big nothing burger, but just
right.
running through my subconscious, I cleaned my house from top to bottom because, and I've learned this from my counselor since then. I didn't know this at the time, but obsessive compulsive activity is a sign of anxiety. And
Correct.
I'm not an anxious person. I don't get anxious normally, but just knowing that was coming at us, I vacuumed. Now our house is a little over 5,000 square feet. I vacuumed every inch of it. I dusted every inch of it. Everything was put in its place. I even
Mm.
tidied up our basement and the attic in about
Ah,
4 hours because I was so just anxious about this thing coming. And later that week, I had a session with my counselor, and she goes, "Those are obsessive compulsive disorder signs, Joe. And
right.
you're typically not anxious like that." And then next sentence, we start talking about the hurricane because she asked me if we'd been hit and how I'd gone. And then she
Oh,
goes, "You have PTSD. You don't even know it." And
right.
I said, "Oh, okay." So that's my big plug for counseling and mental health uh,
Oh, yeah.
training there. I really push for it forever. I think there aren't enough people in therapy. That's one of the biggest problems we have with
There's,
America today.
yeah, we all need it. And I have anxiety. I suffer from anxiety and PSTD, so I'm a big believer in it. There's nothing wrong. Get some help, talk to somebody, find some ways to deal with things. But yeah, PSTD from the hurricane is a real problem. It was, traumatic with Hurricane Ian and Hurricane Irma, those big ones, Charlie. I mean, we never experienced anything like that until they came through here. And anybody, any homeowner, but especially if you're in the insurance industry, I remember on Hurricane Ian, people were calling me. I was at home and they're like, there's water coming in my house. They were panicked and there was nothing I could do. I was like, well, call 911 to shut the power off. They won't help us. And I'm like, I felt for them. But yeah, so it's definitely a real thing with these hurricanes. If they could find a way to, I don't know, make them leave. I told my husband, okay, isn't there something they can do? He's like, you're like a conspiracy theorist. And I'm like, no, I'm tired of dealing with it. And the rates
Maybe
are so
some.
high. It's all,
Oh yeah.
goes together. Hmm.
Well, and how does that make you feel that these people trust you enough that they call 911 and they go, they can't help me. They call Colleen.
It's like they say, "What are they gonna do if you're not there?" I'm like, "I'm at the doctor." They're like, "Well, are you okay?" I'm like, "Yeah, I'm just getting a checkup." Okay, people. I mean, it makes me feel, happy that I'm able to help them. But sometimes it's, of course, overwhelming because I'm like, I can't do anything. I'm not 911, and they're like, "My house is on fire." I've had people call, and I'm like, "Well, call 911." But in all honesty, there's nothing I can do. I'm not near you. I don't have a hose, but I tell them to take pictures, follow this, that, take the pictures, call 911, write everything down. But I guess they just feel like, they're supposed to call their agent. I think back, when insurance wasn't so chaotic like it is now, the agents would come to your house in the middle of the night, back in probably like the 60s or something. They would come to your house, take pictures, write you a check. Well, no, it's not like that anymore. There's too many claims, there's so many people. It's just over that you can't do that. And I understand because I'm the middle person. And so a lot of times the insurance companies aren't very communicative with them. The follow-ups suck. Their lack of people working there, they're all short staffed, and they'll tell you, an average claim takes like 4 to 6 months, just for something small. So if you have anything larger, it's going to take longer than that. That's a lot of time, that could be like almost a half of a year. So I feel like that's why they always call, and then I'm a little bit calming, when I talk to them. Not when I get off the phone. I'm probably a neurotic mess, but on the phone, I'm, calming to them. So I think they like that.
Well, and one thing about you that I've noticed is you are extremely responsive. You get back to people very quickly. I know we've got a property we hold in a land trust. It's a condo. It had a leak. It damaged the condo beneath it. And that condo's insurance company has come back and said, well, tell us who your insurer is. And we want to get paid and everything. I sent it to you. I sent it to our beneficiary. They sent it to you. You immediately sent it on over to the insurer. You took care of it. And
I
then,
sent it. Right.
yeah, yeah. And now, it's been a while and nobody's hearing anything. So that side keeps coming back at me as the owner of the property, the trustee,
Right.
and they keep saying, well, what's going on? Who is it? Who is it? And so I just forwarded to you and our client, and you within, gosh, it couldn't have been more than 10 minutes. You come back and say, here's the claim number, here's this, here's this. And by the way, they're both the same insurance company.
Yeah, that's the funny thing. Then they're going to be going after each other for, $2,500 or whatever it is. It's just
Right,
like,
right, right. It's
that's
like,
where it becomes ridiculous. That's a small thing that could be taken care of like right there. And they're paying for it anyways because it's the same insurance company. It's like if you get into a car accident, like happened to me, I rear-ended somebody, it was an accident. She was very nice, but we both had the same insurance company. So there was no issues. She wasn't hurt, I wasn't hurt. It was a little tap, but that was settled easily. But I think sometimes when like the property insurance, they don't know who the other side is, especially with the condos, and they're just always trying to get the money back from the other party. But if it's the same insurance company, then they're like, oh, well, we're holding the bag anyways. Let's just close it and stop costing more money, and time for everybody else. But that's part of the
right.
issue. Hmm.
I, And I forwarded them that email and I said, I didn't forward them your email. I just snipped the information out of it.
Yeah.
And I sent it, yeah, and I sent it over to them. I said, here's the information. It's the same insurer. And it seems like they would at least search the addresses
Yeah,
before they
you
would
would think,
let go.
but have some common sense or say, do you know who their insurance is? But sometimes it's just like the lack of communication and some stuff that you think should be like easy and bingo. Oh, let's ask. They don't do that. The common sense is kind of lacking in some aspects of it. And, that's the reason we're here about these land trusts because, the insurance companies, the common sense when it comes to that is extremely frustrating for me to have to explain to them, you know.
Yeah. My sister-in-law is a math professor and she says common sense is not common. Trust me.
Right. It's not, it's not. You can be book smart and have this, but it's just like, okay, let's figure out a problem. I just like to figure out solutions because, we can scream at each other all day. I had a client on the phone with me yesterday for 2 hours because she had a claim. She ended up getting an attorney. They got a claim check, but it had, her name, the attorney, the public adjuster, and then a lender, but she didn't actually have the loan. So she's been going back and forth saying, I don't have this loan. You added it. You have to take care of it. Okay. I asked the insurance company, there's no lender, remove it. Well, they needed proof that she didn't have the loan. Well, this mortgage company is supposedly not in business. I called, you can't really get through to anybody. There's an email, but there was a fax that was sent from them that she signed to request to add this mortgage. They had her policy number, the property address. So we're trying to tell her they had all your information. So if this was fraud, we need to investigate this. But unfortunately, the mortgage company and the insurance company have an obligation to each other to include them on that check. And with you just saying you don't have a loan, like it's not good enough, And she was screaming, and I was like about to tell her, is there something you can take or do to calm down? Because it's the end of the day and we all want to help you, but we're telling you. So finally they gave her a solution after 2 hours of calling and getting 4 people. And the supervisor said she could write a letter, get it notarized and sign that she didn't know who this lender was. She has no loan. So we could document it, put it in the file. They would take it off and reissue the check. Oh, I'm not doing that. She was still arguing. I'm like, come to my office right now. I'll be here till 8 tonight. I'll notarize it for you. I'll help you write it and we'll get this sent in. Well, she didn't want to do it. But then later she she's like, what am I supposed to put in the letter? So I told her and I said, sign it and I'll notarize it and we'll send it in. So, finally she realized it was a simple solution, but if somebody did steal her identity and did try to add that loan on, unfortunately, she's the one that's going to have to do some work to fix it. And I feel like that sometimes that's the issue. We have to all do a little bit of stuff that's a little bit inconvenient for us, but there's always a solution. And I was going to wait on the phone with her until we got it fixed. I didn't care if it was 10 o'clock at night because I wanted her to get this taken care of.
Well, and
So
you,
hopefully she'll do it.
well, and the crazy thing is that is not the first time I've heard that happening. That is probably the third time in
Well, I'm sure
27
it,
years.
it happens all the time, but and then you try to talk to the people at the insurance company, and I'm like, well, so I said, well, let's go to the comptroller site, and it was nothing was good enough for her, or nothing was good enough for them, and I'm like, oh, I don't know what we're supposed to do here. So I said, why don't we call your attorney that settled the claim? Surely he could help you do this. Well, he wouldn't. Apparently he wasn't replying to her. So she was a little bit irate and just a little bit, anxious and loud. So sometimes you just have to talk them down and say, we're going to work this out, but we got to all work together. But yes, it's
Yeah,
difficult.
unfortunately, a lot of us lawyers have a bad reputation for not returning phone calls or emails very quickly. And in our defense, I will say on an average day, I receive close to 200 emails every single weekday. So
Oh, me
it
too.
takes a while. It takes a while.
It
And you
takes a
want to
while.
like,
And that's what I say,
yeah,
patience. Give me at least a couple hours, depending on what you're needing done. And like your stuff is legal matters. It's not like always a quick fix, and
right.
it takes time and conversations back and forth that before you get that person an answer. So I don't ever expect an attorney to reply to me right away, obviously, because there's more that has to go on to it.
Well, and
So I understand.
I tell everybody our competition, it's not other lawyers, it's not other insurance agents, it's Amazon and Domino's
Oh yeah,
and
everything's so
you know,
fast. You can just
right.
pick your phone up and you can get it. And that's what I was telling people a couple nights ago, that like there's a process, and the processes used to be much quicker years ago. Even like 10, 15 years ago, nothing took as long. Insurance agencies and insurance companies, more like it, are ones that go through every little thing. They're just trying to find a way to say no for anything. Oh no, we can't write this policy. Or no, we can't do this. And then, you know, you got to submit everything. Well, submitting everything, then they have to review everything. It's not something that they do in a couple of days. It may be 10 days, and then, for each policy that I do, there's in most cases maybe 5 or to 10 pieces of paper that I have to go through and complete and send in, so just like you. So that's what I'm always like, well, you can get your insurance on your phone, but and sometimes the complicated types of things that you need, like what we do, you can't do on your phone. An auto policy, you can get a life insurance policy on your phone, but you may, and then they're always calling back. Can you tell me what I got on the auto insurance? I'll explain it to you. So most of the time we've spent is explaining, going through the processes, and then you're on the phone. Then, like you said, you have the 200 to 300 emails every workday. And then on the weekends, you may get half as many as that. So, we're working. Just because I didn't, call you back right away, I'm doing other stuff, too, just like you. It's a process.
Right. And going back, I mean, you said in there the complex things we do because you and I are not typically doing just run of the mill. A human being owns a property, it's their primary residence, and they're insuring it
Right.
at their home. That's a lot of what we do is not that. And in our situation, it's land trusts. And I know one of
Correct.
the questions you had for me is, well, let's explain what a land trust is. And I know
Right.
that's a big issue because a lot of people don't even understand what that is. But land trust,
Right.
it's not an entity, it's an agreement between a trustee and a beneficiary. So the
Mhm.
beneficiary is really the person who owns and controls the property. And the trustee, though, that's whose name appears out there in the public records. And I tell
Right.
people all the time, real estate is one of those things that your information is easily available. In other countries like Germany, nobody can just look up your name and see every piece of property you own. But
That's true.
In the United States, it's pretty common in almost every single state that anybody can go online, look up your name in just about any county in or any state and see exactly every piece of real estate you own. Or
Right.
they can look up in most states, they can look up your name on the corporate records database, and they can see every company that you're involved with, every LLC, every corporation, every partnership.
Right.
So, everybody's always talking about privacy and anonymity, but they don't get it because they are voluntarily putting their name out
Your
there.
stuff is right there, what you
Right.
own, what you have. And that's the reason, if you're, and like I tell the clients, if you're concerned, I'm pretty sure that's why you put it in a land trust, the ownership. And we'll explain more of that in a couple minutes. But so, that's the reason that you put it in there to protect yourself. So one of the issues I have is that, most of these admitted insurance companies, which are supposed to be the best because they're protected by the, you know, insurance funds and everything, but they don't want properties in land trust. I had two people this week that are living in the homes that are getting getting canceled, midterms because they're in the land trust. And I'm like, well, and it was with another agent. I'm telling them, well, see if they can add the, land trust as conditional insured, explain to them what the purpose of it is. It's just a lack of understanding about it. And they're like, oh no, they won't do it. So I said, okay, the insurance is more expensive if you can write it without having to get all that hoopla back and forth. But if you're concerned about what you own and your assets and your property because you're putting it in a land trust, if you have to pay a couple $100s more or a little bit more than that for your insurance, I'm sure it's well worth it to you because you don't want people to know what you have, how you have it, how much, it's worth, etc. Because like you said, you can go on the internet, on your phone, wherever, and find out whatever somebody owns and how much it's worth. And I think that's how we have to start protecting ourselves from,
Right.
the
Right.
people around here.
And and that's the thing. I mean, the land trust, since if you use a third party trustee who is not related to you in any way whatsoever or linked to you in any other way whatsoever. So it's not your LLC, it's not your mama, it's not your daddy, it's not your
Right.
secretary, best friend, whoever acting as your trustee. And so it's like us. It's this other company out there that's your trustee. So if somebody looks up your name doesn't pop up on all these property. I mean, we have people that we have 10, 20, 30 properties in trust for them. We have $50 million properties in trust. We have 10 to
Right.
$20 million properties that we hold in trust for these people. And you got to think, I mean, if that person who owns all those properties, they're in that little bump up accident, like you were talking about earlier, somebody's going to go online. It may have been a little bump up, but now they go online, they look up your name and they see, oh, she owns 37 properties in Orange County. My
Right.
neck's starting to hurt really bad right now.
Hmm.
I think I'll call a lawyer about this.
Right.
And so putting our name on it keeps their name out, so they're not a target. One of my favorite sayings is you should be sued for doing something bad, not for doing well. And
Right.
and a lot of our clients, they've done well. They're entrepreneurs, they're small business owners like us, and
Right.
they don't want to be a target. I mean, they're already targets of lawsuits as it is just in their business.
Everybody is. Right.
Right. I mean, if you walk out of your house, you're a target of a lawsuit, but you don't want to look like a deep pocket target for
Right.
anybody.
I have all this money, oh, they have money, they own properties. No, they don't. Because you don't want
Exactly.
to know you don't want to know people to know that you own those homes on public information. If you want to flaunt it and show everything you own, to other people, that's fine. But sometimes it's okay to be quiet about it on, public record documents just for that reason, because, those law signs are everywhere about the accidents, people getting $5 million. And if they don't have an insurance policy to cover all that, they're going to try and get that money from somewhere,
Right. They're going to go
and
beyond it. They're
mhm,
going to go
right,
beyond the insurance policies. They're going to go beyond the umbrella policy you have. They're going to go beyond
correct.
the business owner, general commercial general liability policy. They're going to go beyond everything you can to get every dime they can. So to me, that's the biggest reason somebody would create a land trust is to keep their name out of there so that they don't look like a target. That's the number one biggest reason. It's an asset protection, of course,
Hmm.
because you're each if each property is in its own separate land trust, they're separated from each other and they're separated from you as the
Correct.
beneficiary. But by the same token, your name is not appearing out there with this big bullseye written on it going, yeah, look at me, I own all of this stuff. Or even if it's in LLCs, somebody looks it up and goes, well, they've got 10 LLCs. What do the LLCs have? Oh, they've got all these properties. So they've got money
Right.
somewhere. I'm going to sue them and then I'm going to go digging. You don't even want them to see you as a target to file the lawsuit in the first place. You want it to be, I don't even want to sue you because you look broke. And if
Right.
you're broke, I'm not going to bother with you. Now, with that said, a lot of people see DR, doctor, in front of your name. They're still going to think, oh, they've got lots of money. So for that reason, a lot of our physicians, dentists, chiropractors, and
Hmm.
even nurse practitioners and PAs come to us because they're like, look, I've still got credentials. They're going to think I've got money, and I do, but
Right.
I want everybody to look at it and go, wow, they must be really bad at what they do because they don't own jack
They
squat.
don't own a home or, anything.
Right.
Yeah. Do you recommend somebody putting their personal or primary residence in a land trust, or is that not really needed because of the homestead?
I used to say there's no
Hmm.
bother, don't worry about it. Uh, just don't even put your homestead in the land trust. But I've changed my tune over since April. We expanded. We bought uh, Mark Warda's company. He merged in
Hmm.
with us, and that was
Nice.
Land
Hmm.
Trust Service Corporation. And Mark, he's the godfather of land trust in Florida. He wrote the book originally. He and I worked together on the last two revisions of the statute. So he and I really know it, and he for years had said, no, 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 we can possibly, absolutely, we can put your homestead in there. And I never liked doing it, but ever since April, looking at how Mark did it, and his clients have come to us and they've got their homesteads in there, it can be done and you still get your homestead protections. And so, yeah, you can do it. And the reason I would say you would want to, anytime you would want to put your homestead in
Hmm.
the land trust, is if you've got a really big, pretty house, you can hide everything else you've got. You can have 37 other commercial properties and investment properties that you have, and somebody looks at you and goes, well, they don't have anything. But then they look up your name and they go, oh,
Oh, look
they
at
have
that.
a they have a 14, 15,000 square foot house in Palm Beach, right on
Right.
the water. They've got money somewhere. So, well, and they were driving a Lamborghini SUV when they hit me. That sort of gives it away too, but
That would kind of do it too. Hmm.
it doesn't help. So for that reason, I do tell people, yeah, if you've got something like that and you really want to stay private, you don't, or a big one, you're not in a profession where you can hide your home address. Judges,
Correct.
right,
Police
doctors,
officers, I think.
police officers,
Yeah.
firemen, paramedics, EMS, even nurse practitioners, nurses, they can all have their information hidden off of the records simply because of their profession. But if you're not in one of those professions, let's say you are a CPA, or let's say you're just a large property owner, you have a lot of houses, and
Right.
every once in a while you're going to get a crazy tenant. It's going to happen,
Yeah.
and they will
Or
stalk you. And in fact, I was having lunch with a good friend of mine. He's a lawyer too, at a very big law firm downtown. And he was saying at lunch, he's like, I'm being dragged into this case. I've got a client who is being stalked by this business partner. It's not gone well. And every time the guy moves, this guy finds out where he is and shows up at his house and threatens
uh,
him, bothering him.
that's scary. Hmm.
I, but all I did, I just looked across the table. I said, why don't you just put it in trust with us? And it's like,
And then
I
they
said,
don't know. I think that's a
yeah,
great idea if you don't want people It's too easy for somebody, like you said, to look up on the internet. Oh, Colleen, she's crazy. I don't like her. She didn't do this policy, whatever, and then they show up at your house. I feel like for anybody who has any type of worth at any way, a profession they're concerned about, a little bit of money or anything, or somebody's bothering you, stalking you, because, we do live in the state where you can just carry a gun, I think that's a good idea to protect yourself. Totally.
Well, and I know
I'm
we've
going to
talked
consider
about,
that.
the trustee of the trust owns the property,
Hmm. Hmm.
technically. Our name appears on title, and we have all of the rights that go along with owning that property. We're the ones who have the right to sell it, lease it, put a mortgage on it, give it away, whatever we want to do. We're the ones who have that power. Of course, the trust agreement between us and the beneficiary prevents us from doing that. And if we do it without their permission, we get in a lot of trouble. At least we're going to
Of
be
course.
liable from a money standpoint. But if we do it wantonly, I'm going to jail. So we try not to do that. We try
To,
to
right.
we always have something in our file, whether it's an email or something written, telling us from the beneficiary, signed by them, saying, do XYZ with this property, sign this settlement statement, sign this lease or whatever. But that's one of the questions I have for you. You say sometimes it is more difficult to insure a property if it's in a land trust. Let's say someone does put their home or an investment property into a land trust.
Hmm.
What kind of issues do you have as an insurance agent getting that property insured?
So the issues that I have specifically is the insurance company not understanding who the owner is. Sometimes they'll say, "Oh, there's multiple owners," because the property appraiser could say, your company's name and then comma as trustee of the land trust 858, Main Street. Um, and so they think there's multiple owners and they just don't understand the verbiage, the wording, they don't understand the concept. So that's one of the challenges. And then the other challenge is explaining to the client sometime as to who owns the property. So now you've put the property in a land trust. How it's listed on the public records is how I prefer to insure it because there's no questions back and forth from the insurance carrier in the event of a claim or the application being put in. And so that's the issue, and then finding the companies that don't have issues with land trusts. In my experience, what I do, most of the excess lines carriers like Lloyd's of London, Scottsdale, KW, they don't mind land trust. They'll add it, without the problems that the other companies such as Universal, Citizens, Slide, Tower Hill, all the ones that I've been hearing about lately that are like, oh, we can't do it. It's too many owners, or we'll do it, with no liability, or we can't do it, or yeah, we can, no, we can't. Um, so the insurance for the client may be a little bit more expensive if you can't get the company to understand the communication and what you're telling to them. So those are the big challenges there. And we dealt with this for years with the LLCs that the insurance companies wouldn't insure liability if it's in an LLC. Well, the liability on the property insurance for like a dwelling or a home is just covering the premises. So you're essentially not covering any operations that they're doing. You're not covering anything else other than liability at that home. If there's an injury on the dwelling, a slip and fall inside the house, but that's it. That's the extent of the company's liability on that policy. But they still won't cooperate and add that on. And with the land trust, they were always saying, we don't know who the owner is. And I'm like, oh, that's the whole point. Now you understand why they're doing it. And it's actually providing more protection for them because it's harder to find who the owner is. And then it's going to make, if there is an injury or something happen, it's going to make, that client or whoever was injured and maybe their attorney, if they have one, a little bit more, reluctant to file a case or know the correct person to go after. Um, so that's the challenge is how to communicate correctly with the insurance company or in a language that they understand.
And that you said something important there is the liability insurance. I've heard this for years that if it's an LLC or a land trust, anything other than a human being's name, they always go, okay, we'll insure the property, but we're not insuring liability. We'll drop liability and you've got to go get a separate liability policy. And I've been telling clients for years, be prepared. You're going to have two policies. You're going to have a business owner's liability policy that covers the like a business, and then you're going to have the hazard policy that covers the house for
Right.
theft and damage from storms and fire and things like that. But are you are you finding any insurers who will say that's okay, we'll do liability and hazard under one policy, even if it's in a land trust or an LLC?
I am. I have many who will. So I have many options that will. It just may be a little bit more expensive, but they don't have to put in the inspections and the wind mitigations. So it's kind of offsets some challenges that they may have, with the property if the roof is older or they don't have the updated, permits and things like that. So there's ways around it. It may just be a little bit more expensive to insure, but I would pay a little bit more than have to deal with all the back and forth and not knowing if the policy is going to be accepted and then having to start all over, elsewhere. So, and if you don't have to do the inspection and then, get that picked apart too, because they're picking apart the home inspections as well.
Really? Wow.
Yes. Hmm.
Wow. Yeah, we get that call a lot that people call us and say, "Hey, we can't get insurance because it's in a land trust or an LLC. We've got to get it out quick." And
Yes.
well,
No.
yeah, we go, hang on, just how old is the roof? How old is the hot water heater? How old is the plumbing, electrical, the HVAC? And we're asking these questions and they start telling us, oh, the roof, I don't know. The hot water heater, I don't know. So we go,
Right.
call Colleen and see what she can do
And
before we
see
go
what it
to,
is.
yeah, yeah. Because I can't tell you how many times somebody's called and told us to do that. Take it out of trust. We go, okay,
Oh,
fine. We're not going
yeah.
to, yeah, we're just not going to argue with you anymore. We'll take it out of trust. They get their insurance and then they call us back a week later and go, okay, now I want to put it back into the trust. And we go,
No.
but now you're screwing up your insurance again. You still have to have the insurance. So
Yeah, you still have to
we're the
have
ones.
it, and if they catch it, they could cancel and say it's not their correct name. And I had a couple people this week call, I'm gonna take it out of a land trust. I'm like, well, I'm sure you put it in the land trust because you were concerned about something. I can find you solutions. You may not like the price, but insurance is pricey and sucks anyways right now. So, there's always a solution. I wouldn't say change something that you just did, the land trust, because you were concerned about your personal wealth, your assets, what you own, and then now want to go back and forth. And then I think a lot of times, like, the insurance agents don't understand it, and not all of them, but there's a lot that don't. They don't deal with that, And then the companies, the people, whether you get an underwriter or the customer service rep, some of them may not be familiar with it, and they may. So it just says it sounds like a no, so they just say a no. Like I had one underwriter say, well, listen to me. And I'm like, okay. He's like, who is the owner? And I read him who the owner. Well, who's the owner of that? No, it doesn't matter who the owner of that is because we're talking about insuring the house. You're talking about the trustee. Well, he probably owns 5 million properties, in all honesty, if you're thinking about it like that. But this isn't who we're insuring. We're insuring this particular location, and it's owned in a land trust to protect the owner of the property, the beneficiary. And then sometimes they'll ask to get the trust documents, and some clients are reluctant to send that because they're like, oh, it's protecting me, but it's always confidential. So if you send
Right.
something to my office, it's uploaded into my program, it's protected. It's not going anywhere. If somebody hacks in, well, we have insurance, there's procedures, there's clouds for that. If it goes to the insurance company, all your information is confidential. They can't just release it without a subpoena. There's not just going to put it out there in public. It's for them to know. But, in all honesty, there needs to be like more communication between the insurance company and land trust. They need to find a way to understand it because it's a whole gap. It's a whole gray area. So if there's anything gray area, they just say no, no, no.
Right.
And it's
And I'm so
been
glad.
it.
Well, I'm just so glad you said that about it's confidential because we get the same pushback. I don't want to give this information to the title agency that's doing the closing. I don't want to give this information to the insurance company that's insuring the property.
Mhm.
And we tell them the same thing. It's as secret with them as it is with us.
Right.
And
Just like anything else.
right, right.
Just
You
like
don't
your
have
property address, I can't call and say, "Oh, I don't sell my information." That's like illegal. No. We all have licenses, we all have ethics that we have to follow that are, regulated. So it's all confidential in that aspect of it. All
right,
your
right.
information.
So many people
Mhm.
get so scared about that. Well, and getting that name right on the insurance is so important. And I tell everybody, I go, look, the insured, like you said, should be what shows up on the property appraiser's site. That's definitely
Correct.
to avoid cancellation later, non-renewal, to avoid, hey, we're just not going to pay the claim when a claim arises because you didn't name, you said you're
Correct.
the insured because you're the beneficiary of the trust. And that's not good. You only have an economic interest. You have a right to receive rent off this property. So we'll pay you the rent, but only
Not the
that's maybe
damage.
right. That's maybe $5,000 and we're done. We're not going to pay to replace the house that burned down because you're not the insured, but you put yourself down as the insured. But you don't have that insurable interest because you didn't own the property. The
Correct.
trustee of the trust owns the property. But we still tell everybody, put yourselves down. If you're the beneficiary, put yourselves down as the additional insured.
Correct.
And because you do have that economic interest as well, that you're supposed to be receiving the rents. But another thing is when there is a claim, they're going to make the check payable to you as well as to us.
Correct. And
And
then it's easier to cash.
yeah, and it just makes it so much easier. And we get that a lot that probably, gosh, I mean, we've got over 2,100 properties in trust. So we probably get about 3 to 4 insurance claim payment checks a week
Oh, wow.
from around.
Mhm.
Yeah, yeah, it's a lot.
That's a
And
lot. Mhm.
yeah, and the beneficiaries will send them to us and they say, here, you just endorse the back of this and send it back to me and I'll deposit it. And we go, that's not going to
Oh, that's not
work.
the way it works.
Yeah, your bank's not going to do it.
Right.
They just don't get it. And we go, okay, fine. We'll sign it. We send it back. And then they take it to their bank. They go, my bank won't deposit it. I go, right. You sign it
We
now.
told
Send it back
you.
to us. Yeah, send it to us. We will deposit it because our bank will take
Do it.
that and we let it settle into our account after a few days and then we send it back out to the beneficiary.
Release them the money. Mhm.
Right, right. We do that, gosh, all day, every day. And what we do is we've got a policy. We hold the check at least 10 days
To make it
to
sure
and
it clears.
make sure it
Mhm.
clears, make sure the insurance company hasn't declared it lost, whatever, stop payment. And once it's
Right.
cleared, and then what it is every Friday we look back and go, okay, what money has been in our account at least 10 days? And if it's been there at least 10 days, then we go ahead and disperse it on that Friday. So every single Friday we're dispersing money out of
Yeah,
our
we
trust
do
fund.
checks on Friday too. That's our day. Our refund check day, is on Friday. So I'm like, you'll get your check next Friday because we're doing them once a week. We act like you. It's a
Right.
system. And I'll even advance people money. I'm like, well, if I know the amount and it's reasonable, I'll advance it to you before I actually get the check. Hopefully they appreciate that. I'm giving it to you. I don't even have it. But
Yeah.
yeah, so we do it Fridays as well. It's check
Yep.
day.
Yep. I think any
Mhm.
good business owner, they try to get their bookkeeping down to where it's, twice a month I'm doing payroll, twice a month I'm
Right.
paying all my bills. And because it's the same amount of work, I told my employees, I said, if I could do payroll once a year, I would do it. I'd pay you all once a year on December 31st for everything you did, but I don't think you would like me very much if I
You
did
wouldn't like
that.
it. You'd be like, "Oh, I have so much money," and then you'd by halfway, a couple months, you'd spend it all. So yeah, we get paid every 2 weeks too, and we do our checks once, a week, our refund checks, and the bills are paid. Most of them we try to do auto pay, but because it's the biggest part of it is the accounting. And my office does almost 100% agency bill. So that means we're getting the money and we have to pay the company. So it's a lot of posting, backlog, accounting, matching up and doing it. So that's a big process. Just getting a quote is the small part. I could do quotes all day. It's all the other backup stuff that takes forever. So,
Well, and that's another good point because you're an agent and you have multiple insurers you can go to.
correct.
You're not a captive agent that, hey,
I'm
I'm
not
only with this
captive. Correct.
company. So,
Right.
and this is one of the things I've always said when you're in real estate investing, when you own a lot of properties, or if you're in commercial properties, you cannot go to, number one, you can't go to a big bank like Bank of America
Right.
or something like that because they're just not going to, you're too small for
They're
them.
not going to understand your
Right.
process. Yeah.
Well, you need to go to a small local bank, but by the same token, you also need to go to an independent insurance agent who has
Right.
access to multiple companies that they can get you quotes for. Because if you're just going to one captive agent, yeah, those are the ones I always hear. Well, my agent says that they can't insure this anymore, so I've got to take it out of the land trust. I go, where'd you go? And they tell me,
Mm,
it's usually a big TV company that you hear about all day long. And I
right.
go, yeah, they can't do it because now it's not held by a human being and they don't know how to do it.
Right.
So,
You got to do it a little, somebody that has a little bit more creative carriers, a little bit more creativity on their side instead of just like, I have these companies that do this, this, and this. Well, I'm sure they could do the land trust. They just haven't explained it correctly, or they just don't need it. They're so big commercialized that, that is a little bit harder to understand. So no, they would just say no and tell the person, we'll take it out and, just do it with us. I've had several people like, probably three this week that we're talking about taking out land trusts. And I'm like, I can help you. I mean, you don't need to do that. And let's figure out this solution. And, but sometimes it's just the thing that the client, they get frustrated. And like you said, they're used to Amazon, 5 seconds. My order will be here in 30 minutes, and we're like, no, let's just do it. I'll shop around. I'll find you something that'll be affordable in today's market. And then we'll go from there.
well, and another complication to layer on top of all the complications that you and I deal with when it comes to real estate, insurance, and land trust is now we have a lot of people buying subject to mortgages or they're doing wraparound
Yes.
mortgages. We're seeing
Oh,
that a
yeah.
lot. And a lot of people go, well, there's already insurance on the property. It's escrowed with the lender. I don't need to get a new policy at all because I'm just buying it subject to. So I get their insurance, right? Can you talk about
They
that?
think.
Yeah.
No, and this is a good question because these wraparounds are always so confusing to me. Um, So I'm trying to help a guy with one now insure it to the end buyer, and she's like doesn't understand the whole thing. So when you're buying it subject to, like I told other people a couple nights ago, so when you buy that property, the ownership's changed. Even though the loan is still intact, the ownership of the property has still changed. So the insurable interest has changed. Now that policy that homeowner had with their loan, even if it's lender placed, is kind of its own thing in itself. But if they have a regular insurance policy, a homeowner's policy, they got American Integrity, Universal, Citizens, whatever the case may be, the the insurance company is going to say, oh, the ownership changed. And just like you said, they're going to look and be like, oh, name doesn't match, claim denied. Maybe they'll pay them their premium back or something like that. But it could be a real problem because the ownership and the occupancy type of the property is now different. It's not owner occupied. And the insurance companies don't use the loan as proof of insurable interest because they can change ownership at any time and still have the loan. So they need to change the policy. And like I tell the clients, the day that you do that transaction, that you buy it from that person, even though that loan isn't being paid off, you're taking over their loan, you're putting it in a land trust, you need to reinsure that property that same day. Don't try and do it after the fact, because when you do it after the fact, you're saying, oh, contact that lender, get the money. And I'll do it. I contact the mortgage companies all day long to get premiums paid. But sometimes with those, they're like, oh, there's already a policy. They don't understand. Now the names change. It can bring up some red flags. In addition to, it may take them a long time to pay it. I mean, sometimes we're sending them for months fax, email, phone, mailing the invoice to get them to pay it. And the other policy may still be in place. So they need to get the new policy, cancel the old. So the old owner, who's now the old owner because they don't own it, gets their money back. They don't have to be involved in getting a claim check or anything like that, and get the new policy and do it the correct way. So you're insured, correctly, obviously.
Yeah. So bottom line, you buy subject to, you buy a wraparound, you've changed title, you need new insurance, period. And
Correct.
and if it's escrowed with the lender, the end lender of the original owner, you've got to get their loan number on there and list them as a mortgagee, loss payee,
Correct.
as well as yourself and of course the land trust. If it's held in land trust, we always recommend subject twos be held in, and wraparound mortgages too, be held in a land
Right.
trust so that you can always get a satisfaction later, and consumer protection issues. That's a whole thing, but you've got to get new insurance. You can't just rely on, well, there's already insurance in place. I'm already paying for it as part of the mortgage payment to that lender. so I'm not going to get a new policy. Yeah, well, the house burns down. That lender will, fortunately, the lender may be paid off, but you've also lost everything you've put into it and you get nothing else.
Right. And do you see any that many with the subject twos with them, their loans being called due, as they say?
That's a good question. Okay, so I've only had two loans on subject twos
Hmm.
called due under the due on sale clause in 25 years when they put
Well,
it into a land trust. And in both
correct.
cases, it was the same borrower, and we put each of her properties into land trusts,
Oh,
and it was the same lender. It was Flagstar Bank. Flagstar
oh,
does not have any tolerance for land trusts
for
because
that. Okay,
they
good to
had a
know.
problem with it. So what happened was we fought with Flagstar for about 5 years on one of them, and Flagstar finally said, "Oh, okay, now we get it. Never mind, we're fine." But you're right.
Oh.
What triggered it was they got a new insurance policy
And
that
they always say, "Oh, you're going to trigger it," and I'm like, I do not want to be in that position. So I'm trying. I want to get the best solution for the client so they don't run into that position. And I had one client's like, "Oh, you can put the land trust, name it like the prior owner's last name, so then they'll just think it really is for like you know, planning purposes, however they say." And I'm like, oh, that makes sense. But are you an attorney? I wouldn't ask, but I could see maybe that could be one way they could look at it and be like, oh, wait, it's the last name. Okay, yeah, that makes sense.
yeah. It's very, very common that when our clients buy subject to, they tell us, they go, "I want the trust name to be the Smith Family Trust, and you're trustee of the Smith Family Land Trust." Okay, fine, we do that.
Perfect.
So then the way they do the insured on the policy is the Smith Family Land Trust, Land Trust Service Corp, or TRSTE, or one of our other companies, trustee.
Right.
So that whenever a claim is paid, we see this all the time. The claims check comes payable to the Smith Family Trust, Land Trust Service Corp, trustee, and then the beneficiary's name. And then also, if there's we've actually had claims on subject twos
And the
where the
mortgage
checks
company.
pay, yeah, where the check's payable to us, the beneficiary, not their borrower, and the main lender, the first lender who's still on the house, whose loan was taken subject to. The lender will send it to us and say, "Here, you need to sign this check and endorse it." And then they send it over to our beneficiary and say, "Now you endorse it." And then it goes back to the lender, and the lender handles the claim. They get the money and they apply it to the loan, or they disperse it back
However,
to, yeah, to our client to get the repairs done. So but they didn't call the loan due. They still did not call the loan due. So it just depends on the lender. And I talked to another guy a couple of weeks ago who he said he's been doing subject twos for about 30 years, and he's had it
mhm.
about four times. He's had four times where they've called it due over 30 years. I don't know what he's
Oh,
doing to have gotten it called due four times, but he has done hundreds and hundreds of subject twos, and only four times out of that many, I
out of
don't think.
that, it's a risk. It's a risky that they're going to take when they do it. So, and then if they do get it called due, do most of them just try and sell it, or maybe they just refinance to get out of it?
In his case, that's what he did. He said, "Well, it's fine. The first three I did, that they were flips anyway. I bought them, I fixed them up, and I sold it, and I paid off the loan anyway, so it didn't matter."
He
And
was
he
planning
said,
to do that. Okay.
"Yeah, but
Hmm.
the latest one he got, he said, well, this was actually a buy and hold, and everybody knows right now is not a great time to be refinancing because you're going to go from
Right.
that nice two,
Exactly. At 3%.
right,
Yeah. If you
3%
have,
rate to 7.5." So that one, he actually hired another attorney to represent him to fight the lender. And I think they're just going to argue it out. It's not a monetary default. You're still paying the mortgage. The
correct, you're
insurance
still
is,
paying
yeah,
it.
you're paying the taxes, you're paying the insurance, you're keeping the property up probably better than the prior owner was. You're
Right.
doing everything you can. It's a technical default. It's literally and that's what it's called in the law. It's called a technical default, that you have transferred the property's ownership. Everything else you're doing is absolutely fine,
It's the
but you
same.
trans,
Right.
yeah.
And most of them I see, like a lot of times they'll send like some things I don't really need to see, but they'll send like the prior owner's, loan balance and shows that they were in the rears, $25,000, $30,000. So I feel like all of a sudden they're behind and then they get caught up and then this, new insurance. So of course it's going to run some flags with the mortgage company. But like you said, in most cases, they're getting paid, it's current, they should be fine. They
Right.
shouldn't be concerned about it. The property is being kept up, it's paid, there's somebody in there. And then some people, like you said, they'll take it a step further, do the subject to, and then resell it in the wraparound. What
Oh.
exactly is the wraparound?
Oh. A wraparound. I was explaining this the other day to somebody in the office. Okay, so subject to, you're buying the house and you're taking it literally subject to the current mortgage that the owner has, and you are making
Right.
payments straight to that lender is what you're doing. Now a wraparound, and in a subject to, there is usually not that much money left over that's going to that seller. That seller really just wants to get out from under the house. There's not enough equity
Right.
there to worry about it. They sell it, and okay, now you, the investor, are going to pay my payments directly to the lender. I'm out of the picture. With a wraparound mortgage, you sell the property and it's at a higher price, and you finance it, seller financing, but
Mm-hmm.
you don't pay off the mortgage. So the borrower, the new buyer, makes the payments to you, the investor. You, the investor, then take those payments and pay the original lender. And you should have a little bit of spread there, a little bit of profit that you're keeping every month because you've sold
Mm-hmm.
it for higher. So your loan should be higher, your interest rate's higher. So you're going to make more money. And that wraparound mortgage references the main mortgage so that it says that when you pay this wraparound mortgage off, they're also beholden. They have to pay off
The
that
first
mortgage as
one.
well. If it's not paid off already. So we're seeing a lot of wraparounds, and yeah,
I
you're
know.
absolutely right. You're absolutely
I
right.
think
That's
it's going to
very
become more popular because the high interest rates now, like people who wants to go from a 2.9 to an 8, they want to take over that and then buy it. So I know that's going to become more popular. And I didn't really hear too much about a wraparound up until like the past maybe year. I'm like, a wraparound. So we always scream when we hear it in my office. We're like, oh, it's a wraparound. It's just the term. But I when I hear it now, it makes sense. But then I think sometimes, the end buyers are like, I'm the owner. And I'm like, yeah, you're the owner, but it's still in this trust and this, and it's hard to explain to people. But I feel like, you're in this position buying this wraparound mortgage. You may not have the best credit. You're getting it repaired, and that's why you're doing it. So it's just supposed to be like for a temporary situation for like, with the interest rate crisis that we have going on right now.
right. And a lot of people, a lot of investors, so they buy the home subject to the original owner's mortgage. So they
Right.
agree, okay, I'm going to pay the original owner. Then they turn around and sell it, and they can use a wraparound mortgage, which wraps around the other mortgage, or they can use an agreement for deed, something like that. But yeah, your insurance all changes at that point because now the insured is this end buyer. They're
The
the
wraparound person, the wraparound
right.
participant. Yeah.
Yeah,
Yeah.
they're the insured, but
Mhm.
and the investor land trust in the middle that's taking the payments, they're going to be
Right.
a mortgage loss payee. And then you're also going to name, so you're going to have at least two mortgage loss payees, because then you're also going to insure the original mortgagee.
Yeah, the original loan and then that new lender and then the trust, if it hopefully they did it in a land trust and then that new buyer's name, it's all going to be included. And then you always got to reference the first loan, that name somewhere because, the lenders will call and like, who's the name? And we'll say, and you have to at least tell them the person's name. As long as most of them hear the name of that the loan's in, they'll fine. They'll pay it, they'll accept it, they'll update it. But I haven't really dealt with Flagstar, I don't think, on a subject to, so that's a good thing.
Right.
Have you ever had an issue? I got a call the other day. There was a client. He said that the lady that they bought the house from, subject to, he didn't know if she was on drugs, but they paid her and she called back to the title company and him and she was wanting more money. And they're like, well, there kind of is no more money for you. We gave it to you. We got the mortgage set up. You don't own the home. They helped her get into a new rental. she lost that lease because I guess she didn't have the money and she's calling them. And I was like, well, what if she gets like so upset or irate that she like calls the mortgage company and tells them that what she did? Does stuff like that ever happen with these people, like prior owners?
Yeah. Yeah.
Yeah.
We've had prior owners show back when we did closings as a title
Hmm.
agent, and also now as trustee, we've had prior owners show back up at our office and say, "Well, I was taken advantage of. I didn't realize I was
Okay.
selling my home and you
I
didn't
didn't
pay off my
understand.
mortgage." Of course, we have an entire packet where they've signed at least 4 documents where they say they understand what they're doing
Right.
and that they're okay with it. But another one is we have family members who show up and say, "My mom sold this house to you guys
Oh,
as trustee, and we didn't know about it, and we don't allow it." And but again, we've got driver's license.
documents.
Yeah,
Right.
we went through everything when they closed. We have all the signed documents, and we go, "Well, here's everything she signed." And it's funny because we had a son walk in and do that, and he wouldn't leave. So we finally said, "Look, your mom got some money. We're not going to tell you how much because it's none of your business.
Right.
And she told us she was doing this because she didn't want you involved, because she didn't trust you, not us, not anybody else.
Right.
She didn't trust you." And he finally left after he heard that. But it does happen that a crazy person will come back, which is my biggest reason. If you ever buy a home subject to a mortgage, if you buy a home from anybody, period, if you save them from foreclosure, get them out of the
Right.
house. They need to be gone out
They
of
need
the
to be
house.
gone.
I can't tell you how many investors their model is, well, I buy it and then I rent it back to them and I leave them there. And I go, that is red flag. I mean, that's like lighting a campfire in Yellowstone Forest when it hasn't had rain for
Right.
3 months. You're just
Because they're
building.
distraught. The person isn't, well right now with what happened. They lost their home. There's something going on. So you're letting them stay there and they're going to think they still own it and not want to leave. You're just setting yourself up for a problem, like you
Oh,
said. That's not good.
that's
Mhm.
that's the number one lawsuit that I always see come up out of these is you've left the seller in the house as a tenant, and they have seller's remorse later, or they are just scamming you. I mean, they will love you to death while you're going through the transaction and, "Oh, you're saving me from foreclosure.
Right.
You've paid off my credit card bills, you've paid off all these things, and you're going to let me stay in my house and all I have to do is pay you rent." 3 months later, they stop paying rent, or 1 month later,
Right.
they don't pay you rent anymore. And you go to a victim and they go to court and they say, "Well, Your Honor, I thought they were giving, I've literally had this happen. I thought they were giving me a gift, Your Honor. I thought they were just being nice and they were saving me. They told me they were a nonprofit and that they do this for everybody." Start making up stories left and right. They're total
Wow.
scammers. So
They're just trying to scam.
yeah,
Hmm.
I tell investors all the time. I go, "Look, if you're buying the house, get them out and
They
don't
need to
close.
leave.
Yeah, don't close until they're gone. And if they don't have enough money, make sure that at closing they only get enough money to get a moving truck and first month's rent and a security deposit wherever they're going. Every bit of the rest of the money stays in escrow at the title company until they're all gone.
Till
And
they're
once
gone
they're
out of the
gone,
house.
yeah, once
Hmm.
they're gone, then they get the balance of their money. But don't leave them there. That's a biggest mistake I see investors make with buying properties subject to the current mortgage, just leaving them in the house. It never works out. Never works out.
No, it's not good. And then they're always concerned about, that irate tenant. And then, oh, is my insurance going to cover if they, burn the place down? Yes. I had one person yesterday. There was a public adjuster that contacted me for a client that I've known for a long time. And there was a bunch of people on the email. And he said, oh, we have to report this claim. And I'm like, oh, what happened? He said, total loss. And I was like, oh, like a fire, And he's like, no, vandalism. And I'm like, oh, he's like, they're two different laws. I know, but vandalism, total loss. I mean, what did they do? Bulldoze it. He said they were filthy. Filth. He
Oh,
said the stink in there. I was like, oh, I want to see pictures of this. I'm going to get some. But, he said they were just living in there. I don't know, in filth. I don't know if there was like a hoarder, but we'll see what happens. Because most of the time when they vandalize the house, or I've had people that like they said the house was like, they were just dirty people living there. They're tenants. They didn't clean, and, they let their dogs go to the bathroom and they didn't clean up after it. Most of the time, the insurance company isn't going to consider that like a total loss. So it depends. If it was a hoarder, it may be like contaminated. And I don't think they're going to, total loss is like if they got to bulldoze it. I don't know if it's that extreme, but sometimes you have to be careful with these tenants because they don't own the house, so they're not going to take like the best care of it. So it's good to go inspect it, a couple times a year, have a property manager or inspection company go there and look at it, and you got to get on the inside. I know that you have to make an appointment with them, but just like you said, the tenants, they don't really care when they don't own it. They got their money, like that lady, and she's like, I'm just going to sit here as long as I can. They don't have to throw
Mhm.
me out. It's my
Yeah.
house. And then she's
Yeah.
going to make up a lie. They scammed me and said this. No, you knew exactly what was happening. Maybe you didn't understand and you should have had somebody else sit with you to explain it to you, but you knew at that point, you said you understood.
Right. No,
Yes.
I had a private lender I represented, and we were holding a property in trust for her, and she had to ride the investor because we were heading into the Great Recession back in the mid 2000s, and to keep insurance, he wasn't keeping his insurance up, but she kept riding him smartly, and he stopped paying. So she went and paid the insurance to make sure it kept insurance on the property. And then she called me one day and she said, well, the house burned down. And she was
Uh,
happy because he also wasn't making his payments to her, but she was happy
oh,
that the house had burned down. And I said, oh no, well, how did it burn down? She said, arson. She said the
oh,
tenant in the house had gotten into a fight with a neighbor, and the neighbor went and burned their house down. But
oh,
she said, but at least I made sure we maintained insurance on it. And she said, I'm going to get paid off out of the insurance. She said, so at least I'm not losing any money on this deal.
right.
But that's another thing. I mean, private lenders, we have a lot of people who do buy and holds or they do rehabs. And I always tell private lenders, and most of our private lenders are really good. They check and they to make sure, hey, there is insurance in place from my borrower, and I'm named
Hmm.
on it as a loss payee. And I'm always preaching to the private lenders, make sure there's insurance there.
Yeah,
Otherwise,
make
and
sure. Because there's a
because
lot of
even
clients that are like, my private lenders don't make me get insurance. And I'm like,
oh,
why? They've just
yeah,
lent you money, even if it's
yeah.
like a rehab loan. But I'm like, well, if something could happen, like any day, something, it's a risk. It could be hit by lightning. There could be a fire. Somebody could go torch it that hated that owner prior, before you bought it. You never know.
Well, and
It's a
that's one of the
crazy.
things that brings me around to what are some other types? I mean, you said they're buying it for a rehab. So they're just rehabbing it and they're going to turn around and sell it, and they've got a
Right.
private loan on it. So that sort of brings me to a good question for you is what are some other types of insurance? And that triggered builder's risk for me, but I've also
Builder's
heard of
risk, renovation, vacant when they're not occupied. And then if it's rented, you want to get a rental dwelling. If it's owner occupied, it would be homeowners. And then if it's commercial, like an office building, that would be an office building commercial policy. Apartment buildings, because any residence over 4 units is considered commercial. So if it's a 5 unit, that's considered an apartment building. Mobile homes, which are becoming more popular because they're affordable, they're getting harder to insure. I can do them up to 40 years old without an inspection. Over 40, if you want the mobile home coverage, like for the property, I need an inspection, and it can't have any polybutylene pipes or aluminum wiring, which a lot of them have, and it has to have a roof that has at least 5 years life left. So, with that being said, there's options for the mobile homes and the mobile home parks. It's just sometimes it's liability based, or you may not be able to get wind depending on the age and the area. As you know, the state's become a mess with mobile homes, but a lot of the companies that rate mobile homes like nationwide are having the same issues too. So I think it's going outside of our state too.
well, what about tenant discrimination liability insurance? I always tell people it's like we're seeing a lot of fair housing violation claims by tenants. In fact, I got a call yesterday from the Florida Commission on Housing about a client
Really? Wow.
getting some complaints. So I'm now a big advocate for tenant discrimination liability
Discrimination. It's
insurance.
becoming, yeah, that's something I heard. This is like the twice that I heard it this week. You don't hear it that much, but I know, property managers can get that. Building owners, regular home, property owners that rent out their properties. And so if somebody say you didn't rent to them because their race, their ethnic background, their gender, whatever the case may be, or their handicap. You didn't provide this. But I feel like, people are just reaching, for anything that they can get in some aspects. But then, some people are stuck in their beliefs with what they'll take and not. And, so that's probably why we're going to see a little bit more of that, because the world and the people and the consumers are changing. But, that's something, it's not even that expensive, depending on how many properties you own. If you're a property management company, I think all property management companies should have that. They should also have E&O coverage and liability. There's a lot of, property management companies that don't have E&O, but they'll make the property owners add them onto your policy. But the property owner's policy only covers like so much, and it doesn't really provide a property manager the full extent of coverage that they need. So I recommend, if you're doing any type of property management and that's your main business and you create income that employs other people, you definitely need to get all the insurance that you can for that. And, tenants coming back at people for other things. Now they're saying, you didn't rent to me, you didn't help me or whatever. So that's just another pot to throw in there, that another line of insurance that we have to protect ourselves. And right now, it's not really like that popular insurance wise. They're not advertising it. So the rates for that were still going to be pretty reasonable and low. So I recommend that as well.
Yeah, I've been telling a lot of clients to get that. I go, look, even if it's in a land trust, we're seeing tenants or prospective tenants or prospective buyers who are
Right.
looking at your ads. They're looking at the property. They're claiming that the handyman you sent over discriminated against them in some way or said something to
Right.
them. And that's your fault because you sent the
You
handyman
hired
over.
him. Yeah.
Yeah. And it becomes a claim. And even if it's in a land trust, still that property is at stake of being lost to have to be sold
Right.
to pay for
Somebody
this
still
claim.
owns it. There's still some financial aspect of it that somebody's responsible for. And so you have to protect yourself. And you can't even put an ad out there for rent if it's not worded and listed correctly. Somebody could say that you blacklisted them from having it. And I've even had those Google scam people call me and say that my website has to be ADA compliant. I guess that's a new one. So I guess you have to have the website, which I understand. I wear glasses and contacts. My mom is 100% blind. So I understand, the fact of not being able to read and see things. But I guess the websites are now supposed to, yeah, like read the, verbiage off to that person, give the, um, you know, little spot where they can read it. And so I'm going to have to look into that because they've said, are you ADA compliant on your website? And I said, oh my gosh, no, I don't think I am. So that's a new one that we're going to have to start looking into to make sure that everything's compliant with all these new laws and everything that are being passed.
Yeah. Yeah. If you're in housing in any way, shape, or form, you're held to such a high standard when it comes to anti-discrimination of anything,
Hmm.
whether it's your website, your advertising. I used to represent a board of realtors when I was practicing in North Carolina, and they got a complaint from HUD because so many of the agents in their ads were just giving directions to the properties to go see them.
Oh,
And they would say, turn right at First Baptist Church, turn left at, AME Zion Methodist Church. They said, you can't talk about churches in your ads in any
oh,
way, shape, or form. So
oh, they were just using it as a landmark, right?
it's a
Yeah.
landmark.
That's
You
what
can't,
normal, but
yeah.
somebody would think they were, yeah, I could see
Yeah,
that, but
you can't do that kind of thing. So
can't do
I tell
anything.
people to watch out for that. What about umbrella insurance? Do you have a lot of landlords or investors who get umbrella
Yeah, I
insurance?
actually have a couple emails today that I had to get back to on umbrella. So a personal umbrella is additional liability on top of your regular homeowner's insurance and any other investment properties that you have. It can also encompass your auto coverage, so your personal auto
Mhm.
insurance can be added. And if you have a boat or watercraft or an RV, the rates for the umbrellas, just like the auto and home insurance, they've gone up too. So the whole market is being hit with these rate increases. But the umbrellas, typically most people want like a 1 or a 2 million, but you can go all the way to 5 million with those. And it's priced in like increments. So the more properties you own, the more vehicles, um, and how many drivers you have will make the rate go up. If you also have youthful drivers, like younger, under 25, that will make it go way up as well. And then there's such thing as a commercial umbrella. So if you have commercial liability and you wanted higher, coverage, you can get an umbrella on top of that too. And so most of the time, seeing those, law signs on the highway that you got, $10 million. Most of those are from a commercial policy because, personal lines policies don't normally go that high. So they would have the commercial umbrella that paid all that out for them. It just gives you that extra line of security. And if you can afford the extra, let's say $500 to $800 a year for that, on top of your other protection, it just gives you the added peace of mind, that you don't have to actually reach into your pockets in your bank account, and that will help you.
Good advice. Great advice. Everything
Mhm.
you've said today has been wonderful. I think it's been wonderful. Do you have any other thing you'd like to add or anything else you'd like to ask me?
I don't think so. We covered a lot, but I'm sure I'll think
Well,
of something later.
we did.
We
Well,
covered
we
the
can always,
wraparound, we covered the land trust. I'm still trying to search for ways to get into with one of those insurance executives. Like, we need to talk to the executive or the president or somebody in charge who understands like the compliance about these land trusts and why they're giving such a hard time. But it's not just one company, it's like all of them, and that's the main challenge I think we have in this industry, and yours communicating with them that.
yeah, I
So
think it always
that's what I
comes
want to
down
work on.
to education. And when I was
Yes.
in the Florida bar in the real property probate and trust law section, we at one point were talking about doing a continuing education seminar for insurance, the insurance side, working with the insurance subcommittee, with our subcommittee, putting together a seminar for insurance agents and underwriters and risk managers about what it is that's out there, because you're right, they just simply don't have the education about it. So, and you're absolutely right about insurance. If it's in a gray area or something that they're not used to seeing, they're just going to say no, just never
They just
mind,
say
we've got
no.
enough. Yeah, we've got enough business, and we don't take on risk. That's what we do not do as an insurer. We don't take on
Right.
risk if we don't have to and if we don't understand it. So I agree with you wholeheartedly. We've got to make a concerted effort to educate them about land trusts. And as more and more land trusts come into Florida, I think
Hmm.
they're going to have to face it. And you and I, hey, I know we're always happy to, we'd be happy to get together and give a class to these folks, these executives and risk
Of
managers
course.
and adjusters and everybody else. Let them know, hey, this is what it is. This is how it works. And it's not a big scary octopus that you need to just go, nope, we're not going to insure it at all. So yeah.
Yes.
So, well, thank you for spending so much time with me
Yeah,
today. I'm,
I
it's
know.
always great to talk to you,
You
and
too.
I hope you have a great weekend and a great week. Okay,
You too. Thank you.
thanks.